I'm Emily Chang, and this is Bloomberg Technology. Coming up, it is the biggest online spending day of the year. How will Cyber Monday sales stack up this year? And just where are consumers spending their money online? Plus, Bitcoin hitting new milestones at a rapid pace. We'll discuss Bitcoin's real value and how the crypto technology could disrupt other industries. And the Koch brothers back Meredith Corporation to acquire Time Inc. for about $1.8 billion in cash. Will the deal help revive the publisher's digital strategy? First, to our lead. It is the biggest day for online shopping in the U.S. this year. Cyber Monday sales are expected to break new records as e-commerce giants like Amazon roll out all the stops on deals and discounts. Adobe is reporting that online spending as of 4:30 p.m. Monday totaled $3.3 billion. Emma Chandra covers the retail industry for Bloomberg News and joins us now from New York. So, Emma, walk us through the trends of the day.
That's right, Emily. So one of the things you mentioned, Adobe Systems there, and they have come out with the biggest prediction for the day in terms of sales. They're expecting $6.6 billion in sales. That would be the most ever in the US. And as you mentioned, they're saying as of 4:30, they're seeing half of that being achieved. We heard from them earlier in the day where they noted that web traffic was up, and they also noted that mobile commerce was winning the day, with traffic growing about 21% and accounting for more than 50% of all visits online. And that's a trend that we've been seeing all year, and actually for a number of years, in terms of the growth of e-commerce, but also the growth of mobile shopping. And if you take a look at the terminal here, I've got #BTV1928, and what you can see here is that mobile e-commerce is now a good 20% of all e-commerce. We've also heard from First Data. They're the biggest mobile payments company in the US, and they were saying that Cyber Monday has got off to a very solid start for e-commerce. They're seeing strong and steady growth throughout the morning and into the afternoon. And they've said overall through the first 14 hours of the day, they'd say that Cyber Monday will show some very strong year-on-year growth trends.
So, Emma, talk to us about who the likely big winners are, or is it all about Amazon?
We always talk a lot about Amazon because as the biggest online company, everybody thinks that they're going to be the winners. We know that traditional retailers, a lot of the department stores, are continuing to promote and offer deals today, as they have done all weekend and indeed all month. But really, it is considered that Amazon and Walmart, the big online marketplaces, will be the big winners today. They're competing on deals like flat screen televisions, toys, gadgets, a big push towards appliances and electronics. We heard Bain say that Amazon alone is expected to capture half of all e-commerce holiday spending growth. And we heard back on Friday from GBH Insights, who said that Amazon had captured about 50% of all the online spending on Black Friday. Take a look at another chart that I have for you here. It's #BTV8686. And what you can see is that while Amazon, which is the blue line here, is soaring ahead of Walmart when it comes to market cap, when you look at sales, this is the bar chart underneath, Walmart is continues to outperform Amazon.
So, Emma, I was surprised to see that in-store sales, physical store sales, still account for 90% of retail purchases. So when it comes to e-commerce, there's still a lot of growth to be had. I mean, talk to us about the trends we're seeing when it comes to online versus offline commerce.
That's absolutely true. It's always quite surprising to see that number, that e-commerce just makes up at about 10–11% of all retail sales. But the growth momentum is really with e-commerce, which is why there's such a big focus on e-commerce, both within analysts and investors looking at the industry, and of course among retailers themselves. And if you just take a look at some of the predictions for the holiday season as a whole, and not just this weekend, you see holiday sales growth as a whole being predicted between 3.5 and 4.5%. But if you look at the estimates for e-commerce growth, they're up towards more like 20%. And that's why we're seeing traditional retailers like the Macy's of the world, like Target, like Walmart, that they've been sort of ahead of the game for a while now, really focusing on what they're offering online. And one of the things that we saw from analysts who were reporting on what we saw on Black Friday, they said that what had been very promising this year among the traditional retailers was that they had better integrated the deals and promotions for products that you can buy both in-store and online, so a customer could find the same thing at the same price whether they went in-store or they went online.
All right, and the day is not yet done. Still a few more hours to capitalize on some of those deals. Bloomberg's Emma Chandra for us in New York. Emma, thanks so much. Staying with e-commerce, the increase in online transactions also means an increased risk of cyber attacks. In the fourth quarter of last year, there was a 20% jump in attempted hacks from November to December. Joining us from Boston, Carbon Black CEO Patrick Morley. So, Patrick, what are you seeing so far this year? Are you seeing a similar type of increase?
Well, the analysis that we did based on the data that we collect was done on 2016, and we saw a material increase, as you said, 20% increase in the month of December. And so we anticipate that this year we're going to see the same type of increase year over year in the month of December. And the primary driver on that is that it provides the attacker, the people who are trying to make money typically, all of the noise happening, like what you just spoke about in regards to Cyber Monday, all of that provides great cover for attackers to go and get consumers and get enterprises.
Now, as I understand it, phishing attacks have been the most common. Tell us about that.
Well, certainly phishing attacks are used in a big way out there by attackers, and they leverage social engineering. And again, going back to during the holiday season, all of us are receiving in our inbox many offers from retailers, from shipping companies, holiday cards, etc. And we're trained to open those. We want to click on those links, and yet an attacker knows that just as well as we do, and so they leverage that to get us to click on the link, to go to a malicious website, and actually or to drop malicious code onto an unknowing consumer or an unknowing employee, and then they're able to actually make an attack.
Now, we spent a lot of time covering the Equifax hack earlier this year. Have consumers been more wary this holiday season? Are retailers doing anything differently as a result?
Well, I think it cuts both ways for consumers because breaches have been in the news a lot. As you said, Equifax, and certainly a lot of the ransomware that we heard about this year. So there's an awareness that goes up. At the same time, the holidays are a hectic time for all of us in our jobs and also trying to buy presents and do other things at the end of the year here. And so all of that, as I said earlier, all that noise allows us to put our guard down a bit, and it creates additional risk for sure. You know, retailers are smart about this. Retailers recognize this, both online retailers as well as those who run physical stores and point-of-sale systems are very aware of this, and they definitely put additional security around this time of year in order to protect their consumers.
I'm curious about the rise of IoT devices, Amazon Echoes and Google Homes, and the rise of, more of these voice-activated systems. Does that make us more vulnerable?
No. The IoT devices, certainly as a consumer, we're all using them in our homes now in a big way, but you'd have to be targeted in order for someone to try and leverage that. And Amazon and other vendors who provide those devices, Google, et cetera, do a really good job of ensuring the security of those. No, the primary issue this holiday season for employees and for consumers is the fact that we let our guard down. Whether or not as a consumer getting one of those emails, getting phished and not thinking about it and clicking on that link, or as an employee, if you're a defender of a company, if you're working in the cyber team, you also let your guard down because you're busy. And so that's where the attacks are going to come from this holiday season, and that's why we're going to see an increase again this year. So
2018, new year, new raft of cyber attacks, I'm sure. What are you bracing for in 2018?
Well, we saw that in 2017, the firm establishment of what we call the ransomware economy. And we're going to continue to see that into 2018. There's a lot of money to be made right now from consumers as well as from companies out there. And ransomware is our dramatic increase, a 2,500% increase year over year in 2017. And we expect that to continue into 2018 as well.
All right, Patrick Morley, CEO of Carbon Black. Patrick, thanks so much for joining us. We'll see how the last few hours of Cyber Monday shape up. Well, Facebook has outlined new principles for advertising on its platforms, including Messenger and Instagram. In a blog post, the social network reiterated the main goal of its ad platform: to make connections between businesses and people by showing relevant ads that are customized for users. The company has come under scrutiny over the past year over use of its ad tools to discriminate against certain demographics. Facebook created a multi-billion-dollar digital ad business by allowing marketers to pinpoint exactly, and we mean exactly, who they want to reach. Coming up, Bitcoin approaches $10,000. The cryptocurrency is up more than 45% in just the last 2 weeks. So what are the risks? We'll break it down. And Bloomberg Tech is live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. A stock we are watching, Square, fell more than 16% in the trading session. This after BTIG analyst Mark Palmer downgraded the company to sell, setting a price target of $30. In a research note, Perry wrote, "We believe substantial growth is already baked into its share price and that it is difficult to justify its valuation." Well, Bitcoin is on its way to 5 figures. The cryptocurrency saw its biggest price jump since August in Monday trading and has gained more than 800% this year alone. Still, not everyone is convinced. Just take a listen to these Wall Street skeptics.
I could care less what Bitcoin trades for, how it trades, why it trades, who trades it. If you're stupid enough to buy it, you'll pay the price for it one day. I've also told people that it can trade at $100,000 before it trades to zero. So tulip bulbs traded for $75,000 once, something like that. The only value of a Bitcoin is what the other guy will pay for it.
I think it's a scam for criminals around the world. I think it has no credibility, and if you have no electricity and no Wi-Fi, you have no value. So I'm afraid I don't spend very long. The blockchain technology is interesting, but the actual cryptocurrency itself, I think, is an irrelevancy.
Bitcoin it just shows you how much demand for money laundering there is in the world. I mean, that's all it is. I mean, it is just...
It's an index.
It's an index of money laundering.
The problem with cryptocurrencies is, A, they're not currencies. Conceivably, they're assets. They're treated as assets for tax purposes. You cannot force someone to accept these as a medium of exchange, and they have no natural demand. That is to say, you are not required to pay taxes, which is 34% of the developed economies. You're not required to pay taxes in Bitcoin. No government will accept Bitcoin or cryptocurrencies for tax.
And yet, Bitcoin shows no signs of slowing down. Our Bloomberg editor-at-large, Corey Johnson, with us from New York. So, Corey, is it a fraud? Is it a scam? What is Bitcoin's real value?
Well, I think that there is an element of the truth. There's a greater fool theory at work here, certainly, but that is the case with all financial markets. The intrinsic value of Bitcoin, surely it's nothing, just as the intrinsic value of gold is next to nothing. But nonetheless, these are areas of speculation, and for those who want to speculate, there is certainly a lot of that going on with the price of Bitcoin right now. So
has anything fundamentally changed in Bitcoin in the last month, in the last 2 weeks?
In the last month or the last 2 weeks, absolutely not. Although what's interesting here is there's a hope and a belief among some of the speculators in the market that the very rise in the price will lead to a split. They won't call it a split, they might call it a fork in this case, and that a fork that might double or triple or quintuple or whatever the number of Bitcoins out there, that if that were technologically possible by changing Bitcoin's underlying code, that there would be more of them out there that would enable more usage of it, and that just like a stock split doesn't actually add value to an asset, to a share of stock, the notion, but sometimes a stock will rise after a split, that somehow this would cause Bitcoin's price to rise if it were to split. But technologically, that's a very difficult thing to do in the very nature of the way Bitcoin's code is written.
Who are the more recent traders in Bitcoin?
Well, what we've learned is that in the last week or so, there's a terrific story in the Bloomberg terminal at Bloomberg.com that points out that there is, in fact, a lot of retail interest. That this may be, to some degree, a lot of people going home for the Thanksgiving holiday and saying, hey, I made a lot of money on Bitcoin, or Grandma, there's this thing called Bitcoin, you should go buy some. But there's been a very strong retail interest. Just in the last month, we've seen the rise in Bitcoin of 68%, which is really remarkable. Now, this may never get to to 10,000. Now, this may be the all-time high for all we know, but this big rise has been very rapid in this latest jump, and I think it really does also show how strong the volatility is. Because there are no options traded, there's no real easy way to get short Bitcoin. So when it falls like crazy. There's no one there to buy it. It adds to the volatility in this thing. Lately, the volatility has been to go straight up, but the volatility certainly can turn around and work the other way.
I'm curious about the institutional investors that are getting involved here. Are they in it for the long haul?
Well, we'll see. I mean, it certainly is a trading platform right now, and the long-term value of these things. I think when we see a lot of these initial coin offerings and also sort of these industry-specific notions of cryptocurrency might have more functionality than Bitcoin, not least of which because of the Know Your Customer rules that apply to all things in finance. But Mike Novogratz was on just a week ago on Bloomberg Television and talked about raising a $500 million fund, a very big fund, to invest purely in cryptocurrency. Listen to what he had to say.
I think literally we end the year at 10,000 in Bitcoin, and so that's a decent move from here, and I think we end the year at close to 500 in Ethereum.
So we'll see. I mean, you know, predictions on price without based on sort of the actual underlying underneath value. I think ultimately the use cases are going to be a lot more interesting, both for us to talk about, Emily, but also in the way the world works with new types of currency and using technology to solve some of the problems that old types of currency couldn't solve.
Right, that'll be the subject of our next conversation about this. Corey Johnson, our Bloomberg editor-at-large in New York. Thanks so much, Corey. Coming up, media mergers. Meredith agrees to buy Time Inc. for $1.8 billion cash in a deal backed by the Koch brothers. We'll have all the details next. Speculation over Disney CEO Bob Iger's successor has narrowed down to one candidate. Bob Chapek, the head of Disney's Parks and Resorts division, is now viewed as the top contender. Chapek, who has been at the company for more than 2 decades, helped oversee the launch of Shanghai Disneyland, which went on to exceed 11 million visitors in its first year. Iger is scheduled to retire in July 2019, leaving 19 months to complete a transition for the top job. In deal news, after years of struggling in the print world, Time Inc. is being sold to Meredith, paying $18.50 a share for the publisher of Fortune and Sports Illustrated. As part of the deal, media company Meredith received a $650 million injection from Koch Equity Development, giving them a large stake in the brand. So can the company become a more formidable competitor to Facebook and Google in online ads thanks to the larger audience that this deal affords? Let's bring in our Bloomberg News Deals reporter, Ed Hammond in New York. So, Ed, first of all, talk to us about the Koch brothers' strategy here. What do they want to get out of this?
Well, apparently, Emily, they just want to get money out of this. Everything that has been said publicly, both by Meredith and a limited amount by the Koch brothers themselves, is that this is a purely financial investment for them. They are not going to have any board seat despite spending about $650 million in preferred equity here. They're not going to have any influence, apparently, over the editorial direction of Time. So it looks, at least on paper, like this is just something where the Koch brothers said there is a good financial opportunity here. Let's do this. Obviously, it's a slight departure from what they've done historically in terms of investments. So they've done stuff in trucking, they've done some software stuff, they've done some telecom stuff. But this is really their first play in this kind of media, at least through their family office. I think one thing that's really fascinating here is the role of Byron Trott. So Byron Trott is an ex-Goldman guy. He set up this very, very successful boutique investment bank. He also does quite a lot of investing from that in BDT Capital. He's advising Meredith on this. He's also done co-investments with the Koch brothers in the past. So I would be fairly sure that he's had a significant role in kind of bringing these two parties together and potentially getting the Koch brothers involved in a way that facilitated this deal happening.
Now, obviously, Time's digital strategy has been struggling. What kind of impact could a deal like this have?
Well, if you look at Meredith, you know, they have the TV offering, which has obviously been much more successful than the print offering in recent years. And just generally, Meredith has done a much better job at, I suppose, weathering this really like secular change in terms of digital spend not really doing enough to offset the advertising declines elsewhere in the printed media. Time has been on the other end of that. They've had declining revenues year after year after year in terms of advertising. So I think Meredith taking them in, they figured out a bit better how to manage some of the digital spend on the web products, but also they feel like you're bringing the Time brand into an already successful media product. You're going to plug some of that into what's going on in TV and some of Meredith's local media platforms. And the idea, I suppose, would be that you improve an otherwise struggling brand. They've also said that they're going to get 400 million of synergies in the first 2 years, which I think, you know, without them going into any details of this, that will almost certainly result in quite substantial job losses.
So just about 30 seconds left, Ed. What will this mean for some of the more iconic brands like Fortune, like Sports Illustrated?
I think at least for now, they're probably going to stay exactly where they are. And actually, Meredith came out with a statement immediately saying they weren't, you know, under any pressure to divest of anything, and that wasn't part of the plan for doing this. But I think over time, obviously, you will see them at the very least explore possible sales of assets, because this is an expensive product, and they are, you know, they are going to want to realize as many cost savings as they can. That will come through, as I say, some job cuts, but also you can expect them to make some quite serious asset sales as well.
All right, our Bloomberg Deals reporter Ed Hammond in New York. Ed, thanks so much for that update. Coming up, we take a closer look at the juggernaut that is Amazon on Cyber Monday and what competitors need to do to get your attention. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Mick Mulvaney has assumed control of the Consumer Financial Protection Bureau, at least for now. President Trump placed Mulvaney in charge of the CFPB, even though outgoing director Richard Cordray named Leandra English as interim director when he stepped down earlier this month. Senate Democrats Chuck Schumer and Elizabeth Warren met today with English after she asked a federal judge to issue a temporary restraining order to block Mulvaney from taking over the Bureau. Both English and Mulvaney sent out staff memos using the title acting director. At a meeting with Native American veterans today, President Trump took a jab at Massachusetts Senator Elizabeth Warren using a racially tinged nickname he's deployed for years in reference to one of his chief Democratic opponents.
You're very, very special people. You were here long before any of us were here. Although we have a representative in Congress who they say was here a long time ago. They call her Pocahontas. But you know what? I like you because you are special. You are special people. You are really incredible people.
The president calls Warren Pocahontas as a jab at her self-identification as having some Native American ancestry. Now, Warren did talk with Bloomberg TV and called Trump's comments disgusting. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti, and this is Bloomberg. It's just after 5:30 p.m. here in Washington, 6:30 Tuesday morning now in Hong Kong. We are joined by Bloomberg's Sophie Kamarudin with a look at the market. Sophie, good morning to you.
Good morning, Elisa. So after U.S. equities ended little change, quite a few themes to look out for in the Asian session. Namely, we're watching tech shares very closely after Morgan Stanley's downgrade weighed on Samsung on Monday, and Morgan Stanley suggesting a wind back on Korean equities. And taking a look at futures in Sydney and Tokyo, we are seeing a downside at the open there. Now flipping the board to check on the dollar after it eked out a gain after 4 days of losses, and on Powell's comments that he sees rates rising somewhat further. We are seeing a slight uptick in the dollar while the yen looking little change. Gold, though, flirting with $1,300. And oil, that's sinking ahead of the November 30th OPEC meeting on jitters that an extension of the production cuts will not be had, which dragged on energy shares in the U.S. So that could similarly weigh on the Asian session. In Hong Kong, I'm Sophie Kamarudin. Next up, more with Bloomberg Technology.
Bloomberg Technology, I'm Emily Chang. Back to our top story. Cyber Monday will be the biggest online shopping day in U.S. history. Adobe predicts deal hunters will hit up web retailers for $6.6 billion in sales after Black Friday spending topped $5 billion for the first time. And Amazon is expected to take a big chunk of those sales. In anticipation over the holiday shopping season, shares of the company crossed $1,200 a share earlier in the session. So can other retailers compete? Joining us now from Austin, Michael Osborne, SmarterHQ CEO. His company focuses on behavioral marketing and how to keep customers coming back to brands. So Michael, GBH Insights estimated that on Friday, Amazon had captured about 50% of all online Black Friday sales, and that yet you guys have a study out that's showing some weakness around Amazon. Please explain.
Sure. Thank you for having me, Emily. Essentially, there's a weakness where Amazon's breadth of catalog and the expansive nature of all of the products that they offer for sale online can lead to a lack of a personalization capability and a lack of a feeling that they actually have a perspective on their consumer. We're seeing retailers do very well competing against Amazon by taking that approach and applying the data that they've got about their customers to analyzing that behavior and predicting that behavior to then provide a better experience for their consumers.
So how do the strategies of other big retailers like Walmart, like Target, like Jet factor in here?
So I think all of those capabilities that Jet brought to Walmart, for instance, are very interesting for Walmart as a brand. Clearly one that has grown up as a large big box infrastructure company, the ability to put a store literally within touch of 90% of the US population, 10 miles or less. That capability is amazing. However, they were not born in the digital age like Amazon was. So those capabilities that a Jet would bring to Walmart can help augment Walmart in competing against Amazon. And I do think that they're doing a very good job of that. Another interesting example is Walmart acquiring Bonobos as a online-only for a very long time brand that moved into showrooming, where the only way that you could actually look at the Bonobos product before ordering it was to go into a store, but you couldn't actually buy it there. By buying that brand, they're able to put that in all of those Walmart locations and take over what is essentially, a niche apparel retailer and turn it into a significant player in the space almost overnight.
So what about smaller niche companies and how they thrive over this holiday shopping season? J.Crew, for example, I got a $25 gift card in the mail for free, $25 for free, no strings attached. What does that say about how companies like J.Crew are doing?
So, I think in general, when you see those batch and blast or blanket type promotions, particularly the ones that seem too good to be true, like getting free $25 from a brand, it can smell like desperation. If they're targeting you, if they know what you like and they're showing you something that is specific to your browsing characteristics, to your purchasing behavior, to something that speaks to you as the consumer in relation to that brand, that can be very effective and actually drive loyalty. In a case where they're more batch and blast or blanket promoting and allowing for steep discounts like that, it just hurts their bottom line. It goes straight to margin. And that can be something that is a sign of a weakness in a retailer, to be honest.
So name some names for us. Where do you smell desperation, and which smaller niche retailers do you think are actually doing well?
That's interesting. I do think folks that are sending out the $25 free gift cards, that's got to be a sign of tougher times. I think we've all read about the Sears and JCPenney's and the year-over-year same-store sales declines in a lot of those stores. But even some of the ones that are doing very well digitally may be having some trouble offline in their stores, where they're trying to transition that traffic to the online channel. There are up-and-coming small niche brands that are doing very well. If you look at like Casper Mattress, for instance, they get rave reviews, and they've kind of turned things a bit differently for the way you buy and actually use a service like Casper for buying a mattress. Those kinds of smaller niche brands have a very strong point of view and perspective on what their customers want, and they stick to that. I think that's actually a lesson that even larger retailers can use, because they understand their consumer in their given category. They can use that perspective to drive a strong point of view and have their philosophy around their customer be one of listening to that customer, understanding what they want, and delivering the right messaging the right time, as opposed to trying to be everything to everybody.
Speaking of that messaging, what are consumers responding to this year? Is it discounts? Is it a better interface? Is it free shipping?
It's all of the above, and it depends on the brand. It depends on the situation. The consumers are certainly responding more and more to personalized messaging, to messaging that speaks to them about what they want, what they might be wanting in the future, what they've looked at and not yet purchased. Behavior that most retailers actually have all this data already in-house. They're just not taking advantage of it. They're certainly responding to promotions, but the right ones. Your example earlier was perfect, right on. $25 at J.Crew, if you weren't going to buy anything there, you might go and buy there now, but you might have had they sent you a message that was specific to you about what you might be wanting without a discount. I think the way that retailers use promotions and the way that they target their consumers specifically can lead to those optimizations that allow for higher margin and actually higher loyalty and consumer satisfaction.
All right, I've got until January to use it, so we will see. Michael Osborne, SmarterHQ CEO, joining us from Austin. Thanks so much for stopping by. And out of Washington, the White House may ban its employees from using personal mobile phones while at work, according to several administration officials. The proposed ban is driven by cybersecurity concerns with too many devices connected to the campus wireless network. Coming up, they used to be fierce rivals in the race to dominate China's Uber-like trucking apps. Now they're joining forces. Next, this is Bloomberg.
From New York City for our viewers worldwide, this is Bloomberg Daybreak.
How mindful are you of the possibility of what the markets talk about as a trade war?
We've been in a trade war for decades.
The next 2 years are going to be very uncertain.
So you have Brexit uncertainty. To use your word, you have Trumponomics uncertainty.
They have been front and center in selling assets to help their debt, but now it's going to be about growth.
One of the 4 people accused of hacking Yahoo email accounts has changed his not guilty plea. 22-year-old Canadian Karim Baratov is charged with helping Russia's security services with a massive breach of Yahoo accounts. He could face 10 years in prison on charges that include computer fraud and abuse and aggravated identity theft. Prosecutors claim he was paid to gain access to 80 email accounts, including 50 Google accounts. The founder and CEO of Shopify has rejoined the ranks of the world's billionaires. Toby Lutke, a 37-year-old German immigrant to Canada, is now worth $1.1 billion, according to the Bloomberg Billionaires Index. Earlier this year, he was on the list briefly and made it back on after Shopify bounced back from a short-selling attack in October. Shopify shares spiked after the company reported record Black Friday sales this year. And China's massive $753 billion trucking industry may have seen the birth of a new giant. 2 of the country's biggest Uber-like truck services are merging to create a company that could rule that sector. Huachabang and Yunmanman have merged to create a new entity valued at more than $2 billion. The deal ends a bitter feud that saw the 2 companies accusing each other of foul play just a month ago. Joining us live from Hong Kong with more is Bloomberg's Lulu Chen. Lulu, this sounds very familiar here. Reminds me of the Didi Kuaidi merger we saw a while back. What similarities and differences are there?
Yeah, it is absolutely one of those ride-sharing companies merging together after a cash-burning battle. Really, seeing some fearsome, sour, frosty battles between these 2 companies before, but now they've merged. According to our sources, the new entity is valued at $2 billion, and the companies are already starting to seek new funding for expansion. The companies, I think the most interesting part is the person that they picked as CEO, who's Wang Gang. He's an early investor in Yumanman, one of the companies, but he's also a backer in Ofo and also Didi, the company that actually beat Uber out of China.
So the truck market in China is fascinating. 80% of cargo in China carried by truck. Many trucks spend hours at a time simply standing empty. You know, what is the potential here for disruption?
Right. So 40% of the time these trucks are standing empty, and that's where these companies came into play. In fact, before this, there were 200 companies, apps in China that were trying to do the same business. Yumanman and Huoshebang emerged as the largest players. What they do is they provide cargo information from scalpers in China's vast, unruly cities, and then link them with the drivers. And they also provide service, maintenance service like truck repairing, and also gasoline providing for these companies across China. So I guess with the new money that they're going to raise, they're probably going to build out more of these service maintenance centers and also upgrade their IT infrastructure.
So what do we know about how the new company is going to work? Will it be one app, one name?
It's unclear at that point, but if history is any guidance, what we've seen in the past is typically when Chinese companies merge, one company takes over, and they not only in terms of personnel, but also the app and the traffic resources will be redirected to one of the platforms. They don't necessarily immediately kill out the other one, but there will be a focus, a shift in terms of priorities.
Obviously, the Chinese domestic market is huge, but what does this say about the company's international ambitions, the new company's international ambitions?
Right. So far, the companies have remained really focused on the China market. There is potential. We've seen similar companies in Southeast Asia running out of Hong Kong, for example, Hualala and GoGoVan. But these are more like intercity companies. That said, there is potential for them to go into Southeast Asia and also other regions in the world because there's also demand there.
All right, Bloomberg's Lulu Chen, thanks so much for stopping by. We'll continue to watch how this one unfolds. Coming up, are big tech companies responding to the challenges of policing their online platforms? What still needs to be done? We will hear from an industry veteran next. And tune in this Tuesday for coverage of Fed Chair nominee Jerome Powell's confirmation hearing before the Senate Banking Committee on Bloomberg Television. It all kicks off at 10 a.m. Eastern Time. This is Bloomberg.
How do you walk that line when you're in the middle of a crisis situation?
It's really all about enabling people. Technology needs to serve everyone.
But at the end of the day, it's all about emotional decision. I think there's huge innovation left in music.
The hallmark of a truly great leader is that great is never great enough.
For us, it's not about being first, it's about being the best.
Now to a story we've been following, the responsibility of big tech when it comes to policing their online platforms. Google, Twitter, and Facebook continue to look for steps to combat malicious actions like foreign powers meddling in elections, hate speech, and fake news. Just last week, Facebook announced its new tool to show you which Russian propaganda you followed last year. Nathan Myhrvold is the founder of Intellectual Ventures. Before that, he was the chief technology officer at Microsoft. Nathan, I know these are the kinds of issues you give a lot of thought to. I'm curious what your take has been as you've watched the big tech companies testify before Washington and where you believe their responsibilities start and stop when it comes to these issues.
Well, I think we have an evolution of what's happened online. In the early days of the internet, people just typed pretty much whatever they wanted. And there was no money involved, so that worked out well as it did. Now you have the situation where social media makes billions of dollars a year for these companies. Advertisements also do. And they're having to do something they hadn't done before, which is to really look inside what they're making all those billions of dollars on. I think it's pretty unreasonable to expect that they have no level of responsibility. Historically, other forms of media have cared. They have checked to make sure that ads are basically truthful and fair, at least some minimal level standard.
So, Nathan, you know, what do you think these companies then should actually do? I mean, their answer is, look, we're tech companies. We are not media companies. But how much farther should they go to police what is happening on their platforms?
Well, if you're charging for ads, then and those ads all come from the Russian government or somebody else, and that matters in that context, sorry, you're charging for the ads. I think it's your responsibility to look into it to some degree. With respect to the individual speech of people who post things to their Facebook page or tweet them or whatever, there's always a First Amendment issue in that people want to be able to be heard. People have the right to be heard. And of course, I support freedom of speech. But saying they're not media companies doesn't really sound right to me. They are making a tremendous amount of money on sharing that content very, very broadly. And even though they're not paying for the content comes from average citizens, I think they have some responsibility.
Now, talking about your former stomping ground, Microsoft, I recently sat down with Satya Nadella and we talked about regulation. We've got big tech companies facing more regulation in Europe. There's a threat of more regulation here in the United States. Take a listen to what Nadella told me about how impending regulation should impact company operations.
I mean, I think the most important thing for tech companies is not to worry about any impending regulation.
Nathan, how big a threat do you think increased regulation is on potentially putting up some boundaries around these companies?
Well, you have the irony that many big tech companies make billions of dollars on information that its users share with them. And so they're very paranoid about anything that would stop that from occurring or that would increase their costs. And to some degree, that's because it used to all be really cheap and free, so they think, well, why should we have extra costs now? So I think some of it is whining, just to be blunt. Some of it is more in the nature of saying, well, boy, if we allow this little step to occur, then, oh my God, they might actually kill the goose that's laying the golden egg for us.
Right. So before I let you go, you have a new cookbook out about modern bread, modernist bread. You've been fascinated by food technology for a very long time. What do we need to know about the technology behind bread today?
Well, bread is one of the oldest foods of mankind. It's full of enormous lore and legend and belief that some things are correct and other things aren't. For example, that you must knead your bread. It turns out you don't need to knead. And a lot of the other traditional ideas about bread turn out not to be true. So that's what we filled the 2,600 pages of this book with, is history, science, and recipes.
Any interesting high-tech or low-tech trends, food trends this holiday season?
Well, I think there will be more sous-vide turkey and sous-vide other things this Thanksgiving than ever before. So some of these modern cooking techniques are penetrating out to enormous numbers of people. You know, the age-old question with turkey is, how do you keep the breast from drying out and yet still have the dark meat cooked well? And the best way is separate them. Don't cook them together. That's true whether you do it sous vide or you do it any other way.
I'm hungry already. May not need to knead bread, but I do need my bread. Nathan Myhrvold, co-founder of Intellectual Ventures and author of a new book out, Modernist Bread. Nathan, always great to have you here on the show. And that does it for this edition of Bloomberg Technology. Tune in this Tuesday for my conversation with outgoing HPE CEO Meg Whitman. That is all for now. This is Bloomberg.